Apes and Apettes, welcome back to the channel. AMC stock hit that magical level of $4.80 per share and is bouncing. And it bounced quite aggressive today. So does this mean another rally is in store for AMC stock? If you guys recall, a lot of analysts have been calling for this dip to $4.80 per share and then to subsequently retest that $9 range. Is this that moment in time? Well, let's talk about that. We're going to go over the data behind AMC stock, but I also want to give you guys an update on this market because you are almost at a new 52-week high for the NASDAQ. So ladies and gentlemen, we have a jam-packed video for you guys. This is an intraday update on AMC stock as well as the broad markets. So hit that like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. Boom, baby. Let's get into this information. AMC stock is up 3.23%. If we pull this to the daily candlestick chart and look at the actual intraday kind of move from the low to where we are now, that's a move of about 5%. From the high is almost about 6%. So it's been a very sizable recovery today. And right off the bat in the morning, AMC stock did flush down to hit that $4.87 mark and almost instantly caught a bid at that level. Now, we'll discuss kind of what this means for AMC. Like I said, if this rally continues sending us to $9 or higher over the next couple of days and weeks. But first, I want to get into kind of what's happening today. What's fueling this underlying bullishness in the broad market? So the first thing that I want to tell you guys is this is all about the debt ceiling. So earlier in the day today, Biden and McCarthy say U.S. won't default as debt talks inch forward. House Speaker Kevin McCarthy told CNBC in an interview he does not think the U.S. will default on its debt as tense negotiations over the debt ceiling continue. President Joe Biden echoed that sentiment later in remarks from the White House. Leaders are running out of time to raise the debt ceiling before a June 1st deadline when the government is set to run out of money. And this is a very fluid situation, right? In terms of the TGA, Treasury General Account. They're down to about $87 billion in that account as of yesterday. So towards the end of the day today, we're going to get another PDF, an update on where that balance actually sits. These dates could move around a little bit, right? It could get pushed back a couple days. It could get pushed forward a couple days. And you're finally starting to see a little bit of, I guess you could call it, urgency and alignment that the U.S. should not default on its debt. But there's a lot of politics that go into this. There's just getting a deal done is one thing, passing it in the House and Senate is another. But what does this kind of mean for the economy? A lot of analysts and investors are starting to point out, like, hey, if there's deep spending cuts in this bill, well, what does that mean for the economy, right? Because after all, you've heard this in the past year. Inflation has been super high, but the government has continued to spend tons of money. They're no longer giving out stimulus checks as a form of stimulus, but they're giving out trillions of dollars to companies to, do climate change bills or different things, right? If that stuff gets cut back, that could potentially mean less spending, which the stock market usually does not like. So there's a lot of different dynamics to this, and I cannot sit here and tell you guys how this is all going to play out, but I will tell you it is affecting the markets in a bullish way today. Now, we are just getting news about 5 minutes ago that Kamala Harris will be addressing the United States on the risk of a default and maybe give us new information coming tomorrow. So that's the next big thing we want to watch for. Now, on top of that, as far as economic data coming out tomorrow, this will be key, and it is the initial jobless claims for May 13th. You're expecting 270,000. from last month's reading of 264,000. Now, last week's initial jobless claims came in about 22,000 higher than the week before that. And that kind of sent the markets down that day because people are like, hey, the labor market is finally starting to roll over. You've seen a lot of things roll over so far. You've seen retail sales roll over. You have seen corporate profits roll over. You've seen a lot of things, a lot of dominoes fall, pushing us closer to a recession besides unemployment, besides the labor market, right? You just haven't seen the labor market weakness that a lot of people thought would have happened so far. And ultimately, that is probably going to matter more than any of this because the consensus after all this whole time has been the government will raise the debt ceiling. So at one point, it'll switch back to economic data, back to the odds of a recession that will kind of take over the narrative. So that's a big thing to watch tomorrow, as well as the Philly Fed Employment Index, Philly Fed New Orders, Philly Fed Prices Paid, as well as Philly Fed CapEx Index and Philly Fed Business Conditions that will come out at 8:30 in the morning tomorrow. That will be important. I should say initial jobless claims also comes out at 8:30 in the morning. Philadelphia Fed Manufacturing Index as well coming in at 8:30 in the morning tomorrow. Existing home sales month over month and year over year also coming in at about 10 o'clock in the morning tomorrow. Some bond auctions that will be coming out. Fed Bar testimony at 9:30 in the morning and Fed Jefferson's speech at 9:05 tomorrow morning as well. So you do have another jam-packed day coming tomorrow. And even here with earnings today and after hours, you're going to have Cisco, Take-Two Interactive. You're going to have a couple other names. And then tomorrow pre-market, you're going to have Walmart earnings. So all of this will be very important and help kind of guide the market somewhere. And as of right now, people are feeling very, very bullish. And I would say very confident. The NASDAQ is almost at a new 52-week high, and the 52-week high is only about $2 away from where we are currently at right now. This would be the high in August, and like we went over in one of the last videos, the breadth of this rally has been pretty narrow, right? The markets have been going higher, whereas the average stock in the NASDAQ has actually been going lower. Today, you're finally seeing kind of more of the markets participate. And we'll see how this plays out if you start to get better breadth and you start to get more stocks catching up to those major, large tech companies. This rally could continue, but I still think we are on very shaky footing. And in regards to a collateral crisis, this is not over yet, right? You're going to have to see the markets rally exponentially from here to see, the average stock catch up to mega cap tech companies. And if that happens, well, you're going to have a lot more stable market. If, mega cap tech starts to fall, well, it's going to get pretty shaky pretty quickly. So keep that in mind. It's not a guarantee that we're going to keep going higher. It's not necessarily a guarantee we're going to go lower anytime soon as well. This could be a very stagnant market for a long period of time. And that's kind of what we have been seeing as of recently. My base case, though, is for big tech to come down over the next couple of weeks and to get you that collateral crisis. Now, let's talk about AMC and what's currently happening, right? A lot of people have said this 480 level is that reload level. That is that support, that downward support. You get to that neutral level because 480 on AMC is kind of that neutral level, right? That's the previous low that we had set. So you're not bearish, you're not bullish at that point. And then from there, you can start to see a rally to the upside, and it can be quite aggressive. That's what analysts, that's what investors, that's what people have been talking about, right? You've seen this narrative be talked about. And I think to some degree it's correct. But AMC didn't need to get to 480. I think that's not necessarily a true statement, but now that that is happening, you're getting the first instance of this kind of playing out. I think it could be a self-fulfilling prophecy. And I think, with AMC, I personally tend to be pretty bullish. And I think $9 per share is not out of the picture here, but we're getting closer to June 29th. June 30th, the next court date. But what we're getting even closer to is the recommendation from the special mastery. And that recommendation is going to be the next big thing to drive AMC stock. Now, with all of that considered, consider this. We've talked about the $10 puts and the $13 puts for really that, June through July expiration. They've been getting targeted hardcore. Well, same story today. You can see a $13 put for May 19th, just this Friday. A $4 million trade. A July 21st $10 put for $3 million. A $4 million May 19th $13 put. A $2 million trade. So you're seeing a lot of these large orders still coming through. And the fact that AMC has reacted so bullishly today makes me be quite a bit more bullish on AMC. You're seeing more buyers actually stepping in at these levels. And you are, if we go ahead and take a look at the charts here, go ahead and zoom this in a little bit. You are seeing slightly higher volume than what we have been seeing, right? The volume's kind of been trending downwards for a while now. As the price of AMC has been falling, so has the volume. Almost every single day is lower and lower volume. It looks like today you might actually see the first increase in volume day over day in the last week or two, right? So I also think that is a positive step. You are getting more buyers coming into this market. And even though you are seeing a lot of downside pressure on AMC via those options that are still running rampant, I think that is a very bullish thing. Now, let's get into the live short interest with AMC stock. You're looking at 25.19%, up a 0.5% here on the day. 130 million shares currently sold short, up 719.6 thousand shares today. Cost bar average 92.17%. Cost bar max 160.5%. Cost bar minimum at 1%. Interactive Brokers has about 250,000 shares currently available to be lent out with a cost bar rate of 75.3%. So the number's still very high, very respectable overall. Now, if we look at the dollar amount currently sold short in AMC, $641.5 million. Free flow out on loan at 32.62%. Shares out on loan, 168.5 million. Days to cover is going higher now that the volume has been lower. And this is also something that is very bullish for a short squeeze. It just tells you there's less liquidity, less volume to get out of a short position if you need to. The higher the days to cover, the more bullish you should be essentially on getting a short squeeze. 7 days ago, this was at 4.96. Today, it is at 5.28. So incrementally getting more bullish. 100% share utilization. We've seen that for the last 18 months. So nothing really new there. As far as this overall rally with AMC, to upwards of $9 per share, I think that is certainly a very real possibility, right? You hit the neutral level and now you're bouncing. You're bouncing quite a bit. We'll see how things hash out by the end of the day today. But shorts, they've got to be exhausting their capital here with all of these massive put positions we have seen as of recently. A couple green days in a row are going to completely blow those puts out of the water and make those millions and millions of dollars worth of trades very unprofitable. The next big level that I want to see AMC break above, obviously the 100-day moving average. You've broken above that 50-day moving average at $5.08 per share. That's good. The next moving average, 100-day moving average, $5.21 per share. But that also is roughly coincided with this line right here, this uptrend line. And if you break above that, I think you pretty shortly after go to $6 per share. If you break $6 per share, that is the level you got to break to the upside. You break $6 per share, more than likely you go to about $9 per share, right? That thesis will hold more weight to me once you do cleanly break $6 per share. Last time we cleanly broke $6 per share, back here in March of 2023, you broke $6 per share, got a lot of back and forth action around $6 per share, and it held support, and then you rallied all the way to $8.54 per share, roughly $9 per share. So I don't think you can confidently say AMC's going to $9 right now, but I don't think you can dismiss it as well. I think you just have to break above, again, 100-day moving average, this uptrending line, and break above $6 per share, which is only about 80 cents away from where we're currently at. You could do that in a day or two. So I wouldn't be discouraged on this. I think today is a step in the right direction, ladies and gentlemen. So that is going to do it for this video. We have a lot of other things to get into, so stay tuned for future videos here today. In the meantime, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.